Okay, it's Friday, July 8th. The market pretty wild today, right? So it gapped down in the morning, sold off, then it rallied all the way back, went positive on the day. Now it's selling off again. So options expiration. So let's go over a couple of things that we have coming off today. So this is Moderna. We put a bear put vertical on it, and boy, was that a wrong pick. I can see the logic. I got this from one of the newsletters that I subscribe to, given some outside sources a shot at generating some ideas. This one didn't pan out, but I can certainly see the play here, right? It was trending down. It was hitting its 50-day moving average, but then it has just since it took off. What is that? 130-ish to 175. So these are going to expire worthless, right? So we sold the July 8th 110 puts, and we bought the July 8th 115 puts, thinking it was going to go lower. We lost all of our investment on that one. Here's Bowen. We put the bull put spread, so we need it to close above, what is that, 133, 133.86 by today. So the stock is at 138.38. It's off about 1.1%. I think we'll be fine with this. So these options will expire worthless, and we'll be able to capture that spread. Is Clorox. Clorox, we put the bear call spread. I need it to close below 145.44 by today. It's trading at 141.60. I think we'll be okay. It's really getting hit today. It's down 2.6%. Was a little bit of a nail biter early in the week, right? But yeah, it's come in today safely within our zone of profit. So these options will expire worthless, and we will collect that spread. Here's Norwegian Cruise Lines. We again did the bear call spread, so I need this thing to close below 13.12 by today's, trading at 11.47. So barring something amazing happen, I'm pretty sure that these will expire worthless, and we get to take a profit on them. All right, here is Dow Holdings, ticker symbol DOW. Again, we did the bear call spread expiring today. I need it to close today below 55.19. The stock's at 51.43, so cha-ching. Looks like we're going to be able to keep that spread. More profits. ExxonMobil, ticker symbol XOM. We put the bull put spread on it, so I need it to close above 79.67 by today. Stock's at 85.95, so pretty much well within our profit range. So once again, these will expire worthless, and we will book a profit. All right, here's Dish. This one puzzles me a little bit because I went long calls here, and I'm trying to figure out why. You can see here on June 8th, I went long the July 8th calls, $22 strike price. I paid $1.05. Today they're going to expire worthless, so I'm going to lose my entire investment. But if I go back to the time where I did the trade, that's 6/8, so June 8th, which is like right around here, right? So June 8th is here. Why the hell would I go long calls here? That's a little confusing to me. Let me go back to the tape. That's the best thing about recording yourself.
There's another signal that I just saw. This is Dish.
Unusual option activity. That was it. Those are always hit or miss. No, don't do it, man. Okay, so that explains how we got to the Dish trade. So yeah, we bought the July 8th. We bought the 22 strike price for $1.05. As I mentioned, they're expiring worthless. So yeah, I don't know. That unusual option activity thing is kind of hit or miss. This is another example. It fell flat. All right, I'm gonna go over some new trades I put on today. I went ahead, I put a bear put vertical on PayPal. PayPal has been in a massive downtrend. It keeps hitting its 50 and 20, acting as resistance. Both are sloping downward. 20 is below the 50. It came up today, kind of tried to hit the 20-day, and then bounced off again. So I'm expecting further downside, just following this trend. So with PayPal, I sold the August 19th. $60 strike price puts for $1.79, and I went ahead and I bought the August 19th 42 strike price puts for $4.90. PayPal also, because they trade weekly options, gave me an opportunity to do this bear call spread. So I just need this stock by next Friday, the 15th, to close below $80.22. So with the bear call spread, I had sold July 15th $80 strike price calls for 32 cents, and I went ahead and I bought the July 15th 85 strike price calls for 10 cents. Here's Walt Disney, ticker symbol DIS. You can see here also in a monster downtrend following its moving averages lower. It hasn't been able to really pierce its 20-day moving average, no less its 50. So in a downtrend, and I'm expecting this thing to roll over. I'm seeing the MACD start to roll over, so I went to bear put vertical. With this here, I sold the August 19th 85 strike price puts for $1.49. I went ahead and I bought the August 19th $95 strike price puts for $4.35. Disney, because it trades weekly options, gave me the ability here to try to collect some premium. So I went with the bear call spread. I need Disney to close below 102.20 by next Friday. So yeah, I sold the July 15th 102 calls for 27 cents, and I went ahead and I bought the July 15th 106 calls for 7 cents. Match. Here's Match Group, Match.com, whatever it is called. So yeah, in a downtrend, 20 is trading below the 50-day moving average, which is acting as resistance. I see it here. It's coming up. It's testing the moving averages. Try to break the 50-day. Yesterday failed. Today it's trading below the 20 again. I see the MACD starting to roll over, so I'm trying to capitalize on further downside. So I put the bear put vertical on this one. Here you can see we sold the August 19th 67.50 puts for $2.95. I went ahead and I bought the August 19th 72.50 puts for $4.86. Match also trades weekly options, so I'm going to try to capture some more premium using the bear call spread here. So I need the stock to close below $80.36 by next Friday. And I feel good because both the 50 and the 20-day moving averages are below my profitability threshold. So if it continues to act as resistance, we should have a good chance of collecting the premium. So yeah, with Match, I went ahead and I sold the July 15th $80 strike price calls for 56 cents, and I went ahead and I bought the July 15th 85 strike price calls for 20 cents. Here's eBay. eBay is in a downtrend. I'm a trend trader. I like following that trend. That's why that Dish trade before didn't make any sense to me. I could see, it's going to be a little bit of a difficult month because I experimented a lot with that unusual option activity, and I'll continue to experiment with it, but it's got to coincide with the chart. I can't be going long calls on a stock that's in a downtrend. That's just stupid trading. So, lesson learned. I lost a little bit of money with the Dish. I have some others in there that I wrote. I'm probably going to lose money on as well, so call it a learning lesson. Education isn't free. So here we go. eBay in a downtrend. I went with the bear put vertical here, expecting this to roll over. I see the MACD is rolling over. So I went ahead and I sold the August 19th 37.50 puts for 63 cents, and I bought the August 19th 42.50 puts for $1.96. eBay also trades options on a weekly basis, so I went ahead with the bear call spread here to collect some premium. So I need eBay to be below 46.13 by next Friday. Stock's at 43.10. And considering that our profitability threshold is right there at the 50-day moving average, and it's above the 20-day moving average, so if this moving average continues to act as resistance, I think we have a good shot of collecting this premium. So yeah, we sold the July 15th $46 calls for 17 cents, and we went ahead and we bought the July 15th $49 strike price calls for 4 cents. Here's Boston Properties, Boston Properties, ticker symbol BXP, right? Massive sell-off, coming down from 130 all the way down to 87 and change. But you can see here, it's got this gap to fill, lots of headwind up here. Moving averages are really falling. I see this thing trying to consolidate, but today it's rolling over. The MACD is also rolling over, so I like this to the downside. I went with the bear put vertical. So here I had sold the August 19th $75 strike price puts for 64 cents. I went ahead and I bought the August 19th $85 strike price puts for $2.40. All right, one last trade. This one went on late yesterday after I had recorded the video, so I just want to provide the update of how we got here to OMC, Omnicom Group, OMC. Okay, so I did a bear put vertical. You can see this thing is selling off. It's in a downtrend. It came up today. I kind of wish I did the trade today, right? I mean, I guess the MACD was starting to curl lower yesterday, but anyway, whatever the case, I put the trade on yesterday. Today it popped up. It's up 1.4%, but it was up much higher. But you can see here, came up hit its 20-day moving average and has now coming in with the rest of the market. So I have high hopes that this thing will continue to roll over and will make money to the downside. Just gotta follow the trend. The trend is your friend. It's how we trade. Okay, OMC, the bear put vertical. I had sold the August 19th 57.50 puts for 94 cents, and I went ahead and I bought the August 19th 62.50 puts for $2.45. So yeah, as some of these, again, I was experimenting with the unusual option activity, and what's even worse is I was just going long calls and long puts, especially long calls, given that the implied volatility was so high. Probably not the smartest thing to do. So I have a bunch of that. It's probably going to be rolling off, later this month. So it's going to be a tough month. You can see here, I'm pretty much even in the portfolio, right? I got 43% upward bias, 42% downward bias, 15% neutral. So just kind of hanging tough there. Where am I for the month? For the first week here, I got 21 trades in. I got about $2,400 in profits. That's including the losses that we had to take today, right? So it's about 2.1% for the first week of July. All right, I got some work to do. I definitely got some work to do. All right, that's all I got. Have a great weekend. All right, take care, guys.